Time for your favorite day. Smart Charts with Abigail Doolittle, where we look at a timely topic through the charts with the street's top technicians. And Abigail, with the stocks hovering near all-time highs, you're taking a look at what could be next.
You are right about that, Romaine. And to do that with me, of course, we have here Dan Russo of Chaikin Analytics. Great to have you here as always,
Great
Dan.
to be here.
You know, in such an interesting period in the month of October, just 7 trading sessions so far, but 5 of those basically a 1% move or greater. Yes, Today, actually, the S&P 500 falling slightly below that. Most of those to the downside, but volatility is back near these all-time highs, but not quite through them. So let's take a look at your first S&P 500 chart, which seems to have some mixed signals, but talk to us about what you're seeing.
Some mixed signals, and October, you know, despite its reputation, certainly is volatile, but it's generally a positive month on average. So we are starting to see some of that volatility. And there's reason to believe that in the near term, the volatility could continue as the index trades between a rising 200-day moving average and a now declining 50-day moving average. For me, the level that I'm watching really closely is the bottom of this range right here that kind of lines up with 2820 for the S&P 500, the bottom of that August consolidation, which we were in before breaking higher. And the reason that I'm watching it is because if we break down through that level, we would actually complete a double top. That would be a bearish reversal signal, but I think that that support level at 2820 is going to hold. And the reason I think that is because if we look at the bottom of the chart here, that's the advanced decline line for the S&P 500. And we can see here back in August, it broke out ahead of the market and actually made a new high recently. So that tells me that there's actually some pretty good participation in the market, and we are likely to hold that 2820 level on the index, probably hold above the rising 200-day moving average, which sets us up to work to new highs into the end of the year.
Okay, so if, however, that double top, that potential double top were to come into play, it points to the fact that the idea that the S&P 500 might go back down toward next year or last year's lows. However, if we get the other situation, the bullish situation where you're thinking that we see new highs, how high are you talking? Steve Supmeyer of Bank of America Merrill Lynch was on earlier, and he's cautiously optimistic also. He was saying 3,100, maybe even 3,200. Where are you?
Well, realistically, I think, you know, this range is about 200 points wide.
So you would look at 3,200.
You'd be looking at 3,200 on a breakout, you know, not immediately, obviously, but if we broke out and held above 3,000, 30-30, there is scope to go to 3,200, absolutely.
Well, so many of those whipsaws there, of course, having to do with trade. One of the most trade-sensitive sectors or subsectors, the semiconductors. So talk to us here about this chart of the SMH, the chip ETF.
Yeah, semiconductors, and this is actually a chart of the semiconductors relative to the S&P 500. Someone once asked me if I could only look at one chart. This would be it, right? I think semiconductors are so pervasive throughout the economy and within our lives that they really have become an important industry to watch for the overall health of the market. What's that?
The new Dow transports?
The new copper, maybe.
New copper, Dr.
Right?
Chips.
So what we're looking at here is the chip stocks relative to the S&P 500 on the verge of breaking out through 2-year resistance, right? So when, generally speaking, there's a positive correlation between this ratio and the S&P 500. So if the chip stocks can break out relative to the broader market, that bodes well for the broader market. And again, I think evidence does point to the fact that we could see a breakout. The reason I think that is because we are above a rising 200-day moving average. And if I look at the momentum of this ratio at the bottom of the chart, the 14-period RSI is holding within bullish ranges. If you notice on pullbacks, it doesn't get much below the 50 level. So that tells me that momentum to the upside is pretty strong for this ratio. And I think if we get an upside breakout, it increases the odds of the same happening for the broader market.